If you've been trading for some time and you've had some success with certain strategies, but then there's other times where it's just you give it all back. You go up 2 steps and you give it back. There's a market condition that's probably doing that to you and you're not aware of it because the market goes through different stages and cycles. And in this video, I want to share with you some insight on different market condition types and a little insight on where a lot of people fail in certain market conditions and giving it back. Anyways, let's get started and kick things off. I'm Sasha, the options coach, if you're brand new here, and I do a lot of things when it comes to options trading and coaching. So feel free to check out some of the classes on our website. First market condition type is going to be a calm and sideways market. Now, these markets are really peaceful because they're just continue to kind of just move a little bit up, a little bit down. You can, find little pockets of movement as well. So if stocks are, there's a few pockets that are moving really quickly, you can jump on those stocks and the rest of the market is just a little bit more calm. It's very peaceful. It doesn't always mean you can make quite a bit of money because you're not getting explosive moves if you're trading directionally. But sometimes for sideways markets, if you're trading more like iron condor based strategies, even though they might be a little more risky in these types of environments because the VIX or volatility levels might be a bit lower, the thing is that when you put on iron condors, you might be winning them time and time again. So it creates kind of a nice little bit of euphoria. You could say, well, not euphoria, but a little bit more consistency of you getting some wins with non-directional trading because they're calm, they're moving, they could be grinding a little bit, but they're usually in their own range. So very peaceful. All right, the second one that I want to mention to you is going to be trending markets. These markets can feel a little bit more exciting. They're a little bit more grinding to the upside. So you can kind of, trend to the upside. So that could be a little bit of a slow grind. Or they could be like really an explosive move up, like a breakout move, because we've been kind of moving sideways, and then we kind of break out to the upside. Now, these can be very powerful. This is what a lot of people are looking for, right? Because people who trade directionally, they're looking for stuff like this. However, it doesn't mean these are always the types of markets that you need to use to make money. In fact, you can make money in sideways markets, as we talked about, like with iron condors. Instead, these are the markets that most general people are looking for because they're looking for, I'm looking for breakout stocks, or what's the hot stocks? What's the top 5 stocks I should be buying in 2025? This is what a lot of people are looking for. Doesn't mean it's always beneficial, but this is what the way that people know how to make money in the markets. They're looking for strong grinding stocks to the upside. So anyways, these are nice conditions. However, I will say they don't always happen, right? You might get a pocket of time where, let's say, out of a 1 year period, you may get, 2 months where they're actually trending or moving. A lot of other times they're just maybe either sluggish or doing something else. But this is what most people are attracted to find. So if this is the only way you can make money in the markets, then make sure you can trade in the other types of conditions. And remember, all of these conditions that I mentioned here or market types, there are subsets of them as well. So there's more than what I'm mentioning here. All right, let's go to the third one here. And the third one is volatile markets. These markets can feel a little bit scary. So when you have kind of these volatile markets, they pack a punch to them. Oftentimes they're moving to the downside. There's quite a bit of fear in there, chaos, momentum's all over the place. Markets will whip up, they'll whip down. And this is where a lot of people will lose money because they will sell out of positions that they're holding into long investments, and they sell out of those and they get tricked, right? So obviously with volatility, all this means is, if you don't know what volatility means, it just means risk. More volatility means more risk. It's a simple, nice word to say, hey, I've got some risk on the table, but in the financial sector, they use volatile. And it just means that the bars are fast. The bars are bigger now than maybe in the past where they were smaller or grinding or trending lightly. So it just means bigger, more crazy movements, right? Crazy, wild thing going on in the marketplace. So one of the bigger points. All right, last one that I want to mention here is transitioning markets. Now, these markets can play tricks on you because what happens is that when you're looking at this, you're going from volatile to possibly transitioning, and you're thinking, okay, we were going down, 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 and then you're looking for a possible move up. People think it's transitioning, but in fact, it's still in the volatile stage. So you have to be very careful, especially in this type of market condition, is that when we're transitioning, this is where a lot of people lose quite a bit of money as well. So what happens in those cases is that, okay, as we've been going down for a while, people then start loading up, they're buying the dip. Okay. And as they're buying the dip, it starts to maybe head higher. And then they buy more because they're buying the dip thinking, okay, now we're transitioning. We're back to maybe a market that's trending or strong, like kind of over here. And that's what they assume. However, we are still maybe in this volatile stage. And in fact, even though we might go up for a couple of days, even for a week, and then we just roll back over. And that's where a lot of problems stem, is this transitioning cycle, thinking we are moving to a new market condition. And you have to be extremely careful in those cases and situations. And sometimes that transition or the reverse or the pop, can feel like, hey, yeah, this is strong. This is going to happen. But those things are going to be strong after a volatile session. Okay. So if you're still in that volatile segment, be careful that you don't get trapped in this transitioning cycle or market condition. These are the 4 that you want to kind of keep an eye on and look, common sideways, trending, volatile, and transitioning. If you can have a strategy or concept, or at least have one strategy that you can navigate in different market conditions, that's great. Now, if you have different strategies for different types of market conditions, that would be, even better. But if you're at least able to navigate the waters in those different conditions, then you should be okay. But be careful you don't get tripped up in those transitioning stages, because that can be a little bit of a problem. So in calm sideways markets, some people like, things like iron condors, maybe just even selling put verticals. So you're just selling put verticals, or, doing other types of trades. There's a lot that you can do. Volatility lower. Some people also like, calendars in those conditions, because with volatility, as it picks up, that could be because you're preparing for what condition is going to come next. You're not always trading the condition a lot of times. Sometimes you're trading, okay, maybe I'm in this condition, but what's going to happen next? Are we going to be trending, or are we going to be more volatile? So you're trading of what will happen, not necessarily where you're at now. So the same thing here is that when we go into volatile markets, what will happen next is what? Are we going to get back to maybe trending strong stocks again? Or are we going to continue to move down with the trend? Or is it going to be calm after a while? So you have to kind of understand, what condition are you in? Okay. And different conditions, right? Different strategies. And trending stocks, again, you could sell puts all day long. You can do butterfly spreads that are out of the money, bullish butterfly spreads. So we're trending, we're grinding, we're moving to the upside. Volatile markets, you're probably in and out of those trades a bit faster. You're doing a little bit more faster trading, maybe size down on positions. You might also go more time if you're doing option spreads. So going longer term duration, because longer duration eases that curve, the price risk. It eases the T+0 line. And then when you go into this transitioning state, just be mindful. You could use any of the strategies, really. Just be aware that, are you really in a transitioning state? So those are kind of those conditions that you want to watch out for in the marketplace. So I hope that's helpful, gives you a little insight. Truly appreciate you joining me. Check out some of the classes we've got available, and I will see you on the next one. Take care.